Welcome back to Investing Talk Podcast. Today we're tackling a question many of you have asked. Is Globalstar a good time to buy now? Our mission here is to cut through the noise, really look at the latest analyst reports and market data on Globalstar. We want to distill the most important info quickly and clearly, helping you understand what truly matters for this stock. Before we get into the weeds, if you find these insights valuable, please subscribe, like, and maybe leave a comment. Your engagement really helps us bring more of this content to you. And if you're feeling generous, well, consider buying us a coffee. Your support keeps the lights on. Also, if there's a specific company you'd like us to look into in a future segment, just drop it in the comments below. We genuinely love hearing from you. Okay, let's unpack this company and see what the sources tell us. So, to start us off, Globalstar has been making some headlines. But for anyone maybe less familiar, what exactly does Globalstar do? What problem are they solving?
Right. So at its core, Globalstar is a provider of mobile satellite services, MSS, and also IoT connectivity. Think of them as connecting devices, and people too, in places where, traditional cell towers just don't reach. They're basically filling critical gaps in communication where reliability and broad coverage are, well, non-negotiable.
That makes a lot of sense, especially now with how interconnected everything's becoming. So who are these crucial customers? The ones benefiting from Globalstar's reach. What are their main target sectors?
Yeah, they're really aiming at some indispensable areas. We're talking about public safety, first off, so ensuring essential communication for first responders, maybe in remote areas or disaster zones. Then there's critical infrastructure that includes vital assets like utilities, energy grids, transportation networks, and then a pretty broad range of commercial IoT applications. Things like asset tracking for logistics or remote monitoring of equipment in, say, agriculture or mining. It's all about ensuring connectivity in these really demanding environments where, failure just isn't an option.
That focus on reliability is so key in satellite services. And often, a company's financial health is really the bedrock of that reliability. So let's turn to Globalstar's recent financials. How's their performance been looking, particularly last quarter?
Well, their second quarter 2025 revenue came in at $67.1 million. That's actually an 11% increase compared to the same quarter last year. And that growth, it was primarily driven by higher wholesale capacity services and also their commercial IoT revenue. What's promising here, I think, especially for a company that's investing so heavily in its infrastructure, is that they did report net income for the period. Management has also reaffirmed a positive financial outlook, which points to, consistent operational progress in their key areas.
Okay, an 11% revenue jump and actually showing net income, those definitely sound like positive steps. But in a capital-intensive business like satellites, the real story often lies deeper than just sales figures, right? So beyond the top-line numbers, how healthy are Globalstar's finances really looking? Are they generating free cash flow? How are they managing their balance sheet with these big investments?
That's a crucial distinction. Yeah, the company itself emphasizes metrics like EBITDA, that's earnings before interest, taxes, depreciation, and amortization, sort of a core measure of operational profitability. They also talk about adjusted EBITDA and adjusted free cash flow as their key profitability indicators. What's interesting is that while they reported positive adjusted free cash flow, which suggests, improved revenue and maybe some cost discipline, current public summaries don't really give you detailed debt figures or the explicit cash flow numbers an investor might typically hunt for. We do know they have significant capital outlays ongoing, especially with the deployment of their third generation or C3 satellite network. That's a big spend. Right? That kind of investment often means they're either taking on more debt or they're drawing pretty heavily from existing cash reserves, or maybe both. It's also worth noting that public databases don't show any dividend payments being made, and comprehensive, really up-to-date cash flow data isn't as readily available as it might be for, say, a larger, more mature company.
Okay. So managing operations well enough for positive adjusted free cash flow, but the full picture on debt and cash reserves is a bit opaque for the public right now. That gives us a picture of their internal numbers. Now, here's where it gets really interesting. In a competitive market like satellite communication, how does Globalstar stack up? What are they doing to carve out their niche?
Well, they're actively trying to strengthen their competitive position, definitely. And they seem to be doing it through strategic partnerships and infrastructure development. One significant move is their expanded partnership with Parsons Corporation. They're integrating advanced software-defined communication into their offerings. This isn't just a tech alliance. It's about expanding service capabilities, maybe opening new market segments. They're also pursuing international infrastructure expansion, which is pretty critical if you want to build a truly resilient, high-capacity global constellation. And crucially, their agreement with SpaceX for future satellite launches. That really underpins their infrastructure advantage. It secures a reliable, advanced pathway for future network upgrades and expansion, shows a clear strategy, I think.
Leveraging partnerships, securing launches, it sounds like they're making some smart strategic moves to lock down that infrastructure piece. So connecting all this back to the stock, what does this all mean for its price? Let's talk about the money side. How does the market actually value Globalstar? What should investors consider here?
Yeah, this is where it gets a bit challenging, frankly, especially if you're looking for those traditional valuation metrics. Things like price to earnings or PE, price to sales, PS, price to book, PB ratios, the common benchmarks. As of August 2025, the current public sources just don't list accurate ones for Globalstar.
Why is that?
Well, it's not totally uncommon for a small cap tech or satellite firm, particularly one with a limited historical profitability. Essentially, the market isn't valuing Globalstar based on its current earnings or its tangible book value in the way it might value, say, a big, stable, dividend-paying company. Instead, it seems to be trading much more on future growth prospects, on speculation about what the company could become rather than strictly what it is today. You also won't find detailed discounted cash flow DCF models or explicit relative valuation models just lying around in the public summaries. And honestly, any DCF model for Globalstar would be highly sensitive to assumptions about future contract wins and margin expansion, which, just introduces a significant amount of uncertainty right there.
So less about today's earnings, more about the horizon. Makes sense for a growth company in an evolving sector, I suppose. Given that speculative nature, what about the stock's actual behavior on the charts? Moving to technical analysis, what should we know about its price action? Is it just all over the place?
It's definitely characterized as a volatile, low-priced stock.
Yes.
And that volatility is crucial because, look, while there's potential for quick gains, the risk of rapid losses is also magnified. It really demands strict risk management. It's certainly not a set-it-and-forget-it kind of stock.
Right.
It frequently experiences pretty significant swings, often tied directly to company events, earnings announcements, or even just broader sector news. From a technical perspective, its support and resistance levels places where the price tends to stall or reverse. They often cluster around prior highs and lows, so its past price movements can offer some clues about where it might pivot next. Now, the current summaries don't detail specific technical indicators like moving averages, RSI, or MACD, but historically, Globalstar has shown that above-average volatility and those quick reversals. This just reinforces that for anyone thinking about short-term trading, disciplined risk management is absolutely essential. You need a plan. The overall trend for the stock feels very reactive right now. It's likely to shift in response to near-term catalysts, but it lacks that clear, sustained upward momentum without some kind of breakthrough fundamental shift in the business itself.
That volatility definitely sets the stage for the next question. What really stands out to you from the recent news, and what key developments are maybe on the horizon for Globalstar that could actually impact this volatility we're talking about?
Yeah, a few key things stand out immediately. First, that reaffirmed financial guidance alongside the 11% revenue growth in Q2. That signals, consistent operational progress despite those capital demands.
Wow.
Then there's the strategic tech demonstration and commercialization agreement with Parsons Corporation. That's potentially a big deal for their product rollout, and it kind of validates their technology in the market. We've also seen the FCC advancing Globalstar's network expansion plans, which is always a positive regulatory step. Now, analyst coverage, it generally seems focused on the technological potential and the progress they're making, but it's worth noting there are still ongoing concerns about competition and, naturally, those capital needs. And no explicit analyst upgrades or downgrades have been reported recently that we've seen. And as for insider activity or, explicit social media sentiment tracking, that's not really detailed in the available summaries either, though we know sentiment can run pretty hot around news events for a stock like this.
It sounds like there's definitely operational momentum building. What's fascinating here is that potential for future movement. Given its valuation seems more tied to future prospects, what upcoming events or developments could really influence this stock, both short and long term?
Right. There are a few significant catalysts we're watching closely. In the short term, the Q3 2025 earnings release, that should be within the next 3 months or so. That will be a key event, giving us more insight into their financials. We're also looking for further details on that SpaceX satellite launch schedule that directly impacts their infrastructure build-out speed.
Makes sense.
And, of course, the commercial rollout of new IoT and MSS products, especially any coming out of that Parsons partnership,
Hmm.
those are concrete events that could provide near-term boosts or disappointments. Longer term, the full deployment and monetization of their C3 satellite constellation, that's paramount. This is their next-gen network. Its success is really central to their future. This, along with possible new capacity or wholesale agreements with major tech partners, and maybe broader macro or regulatory advances, especially around international spectrum rights or mobile satellite comms generally, those could all drive significant, more sustained movement down the line.
So clear milestones ahead, both near and far. But this raises the important question. With all this future potential, what are the inherent downsides? What are the risks involved with Globalstar that investors absolutely need to be aware of?
Yeah, absolutely. Given its nature, growth-oriented, tech-driven, there are several layers of risk here. First, the stock-specific risks. Those include the ongoing capital requirements needed to actually deploy satellites and expand their infrastructure. It's just a very capital-intensive business.
Right.
Then there's technology execution risk. They operate in highly competitive and rapidly evolving markets, MSS and IoT. So, successful implementation and adoption of their tech are absolutely critical. They can't stumble there. There's also a heavy reliance, it seems, on a few major technology partners or contracts, which means any disruption in those key relationships could have a disproportionately large impact. Beyond that, you've got market and sector risks. We've mentioned the high volatility typical for low-cap satellite and connectivity stocks makes it susceptible to broad market swings. We also have to consider cyclical shifts in technology spending. If companies pull back on investment, that could hurt. And potentially regulatory hurdles or delays things like spectrum and license decisions worldwide. All of that could impact their operations and growth trajectory.
That's a really comprehensive look at the risks. And it definitely reinforces the idea that this isn't a stock for the faint of heart. So after all this detailed analysis, the fundamentals, the valuation challenges, the technicals, the risks, what's the overall picture for Globalstar? Is it a buy right now? And maybe more importantly, for whom?
Okay, so based on our assessment of the sources, we'd give Globalstar an overall rating of about 5.5 out of 10, which we classify as sort of neutral/speculative. The rationale here is, look, Globalstar definitely offers a genuine growth story. It's in the right markets, satellite and IoT. They have expanding revenue, demonstrated operational progress, they have clear strategic partnerships, and a path for infrastructure development. That's all positive. However, there are still these unresolved issues regarding sustainable profitability, those ongoing and significant capital needs, and the absence of truly reliable traditional valuation metrics. That lack of concrete valuation ratios, the heavy reliance on future execution, and that volatile trading profile, it really limits the near-term conviction for maybe a broader range of investors. So this story is likely most appropriate for speculative growth investors. These are individuals who are willing to tolerate above-average risk, perhaps especially if they have a good understanding of the sector itself and Globalstar's core technologies.
And the time frame.
In terms of investment horizon, Globalstar is probably better suited for short-term trading right now, largely due to its volatility and how event-driven its price action is. For a longer-term investment, you'd really need strong conviction about the eventual profitability and adoption of their next-gen constellation and services. You'd basically be investing in a future vision much more than the current fundamentals.
Okay, so for those who are inclined to trade this stock, given its speculative nature and that volatility, are there any suggested parameters or zones they might look at? Just ballpark figures based on the current context.
Absolutely. And keeping in mind this needs verification with live charts. For potential entries, one might monitor for prices maybe in the $1.95 to $1.15 range, again, subject to change. If you're trading, a stop loss is critical, perhaps setting it around 10% to 15% below your entry point. So for example, below $0.85 if you entered around $1, just to manage that inherent volatility. For take profit targets, initial zones could maybe be the $1.30 to $1.45 area, perhaps using prior reaction highs as a rough guide, but always adjust these based on current volatility and real-time news flow. Having a plan, though, is absolutely key for this type of stock.
What an incredibly thorough analysis of Globalstar, really blending that exciting growth potential with the inherent risks and the very specific investor profile it seems suited for. Thank you for walking us through all that.
My pleasure. It's a fascinating case study, isn't it? And maybe as we wrap up, here's something to consider. In a market that seems increasingly driven by future technology and innovation, how do you personally balance the allure of that groundbreaking potential with the, let's say, concrete realities of current financial metrics? When you look at a company like Globalstar, are you investing more in the promise of tomorrow, or are you demanding profitability today? Something to think about.
That is a powerful question to end on. A great thought experiment for our listeners. Thank you, everyone, for joining us for this exploration of the sources. We'll catch you next time on Investing Talk Podcast.